What's up, everybody? Welcome to the Stocks channel. On Friday, the indices came back to a very critical support zone, and the question everybody's going to be asking is the bull trend finally over? First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So Friday in SPY, we were down nearly 1%, and we did break down below this support at 514. And I did tell you below 514, we should come down towards 507. And we did start to bounce intraday just above 508 because we do have support at this rising 20 daily moving average, which is just above that support at 507. So it is completely acceptable that we could bounce from this rising 20 daily moving average because we are in a bull trend. And sometimes in a bull trend, you simply pull back to the 20 daily moving average and then put in a higher low before you continue higher. Now, Friday was quad witching and there was a lot of money rotating around. And if you ask the question, is the bull trend over or is this now a risk off market? I have to believe that the answer is no. Now, there are many reasons why I believe that, and if you're in the Discord server, a lot of the long trades we're taking are still working because we're being very selective on the stocks we're picking, and I still do think this is a stock picker's market. So if you're going to ask whether or not it's risk on or risk off, it really depends on what you're trading, and if you're trading the indices, I do think they're just going to chop around within a range while we see money rotating between stocks. That means you could stay long in quite a few names, and I'm not going to talk about which names those are now. That's what we're doing in the Discord server. But I still do believe this could be a very risk-on market in a lot of assets and a lot of equities, which means we will likely continue higher in the indices once we've completed this range and break out of it eventually. Now, if you're just looking for a very simple rule to get risk off, you could have got risk off below 514, but this is really still a bull trend as long as SPY is above 502. Above 502, that's simply the breakout of the February highs, and this has been making higher lows and higher highs since we've had the breakout. So there is nothing that says we need to go back to that level until we see price breaking down below 507. That means even if next week we get a weak start and we come down towards 507 and we start to bounce, we could still make another brand new all-time high and hit that price target at 520. Now, if we break down below 507, then we're getting that critical test of 501 to 502, and what happens at that support is going to tell us whether or not we still have the bull trend. If the bulls cannot keep SPY above 500, it's going to be very difficult to say we have the bull trend, and that means we'll come all the way down towards this gap fill and rising 50 EMA right around 497. So going into next week, I think you really just need to see whether or not we're above or below 507, and if we're above 507, I do think it's going to be beneficial to stay bullish. On the NASDAQ 100 triple Qs, we were down about 1.2% on Friday, and the triple Qs did break down below this support at 437, so we do have a double top and a lower high rejection because we've double topped from the all-time high price right around 446, and then below 444, we broke down to a lower low down below 437, and that does mean there is a chance now the triple Qs will come down towards this support at the rising 50 EMA and the gap fill zone between 425 and 427. Now, if we drop down there, that is likely going to be a support, which could lead to another bounce, or we could start to bounce and get rejected from the breakdown and then continue lower at a later date and hit that gap fill later in the month. So without a doubt, if you're just looking at the triple Qs, this is the start to a breakdown with a double top rejection and a lower high into a lower low. But this is still a larger degree bull trend if you zoom out above the rising 50 EMA, which means bulls will still buy the dip if we just drop about another 1.5%. So if you are shorting the market, you need to be aware that there will be buyers just a little bit lower. And if you are shorting the market, you also have to watch to see whether or not we can break this lower high of resistance right around 444. So yes, there will be people shorting this market. And yes, there will still people going long this market. That's why I still do believe this is a stock picker's market. And that does mean the indices will likely stay within a range as there are stocks going higher while other stocks go lower. And that will average out and the indices will really go much of nowhere. Now, if that changes and all stocks start going lower or all stocks start going higher, then obviously you need to flip the script. But as long as you understand which stocks to short and which stocks you should be going long on, I think you could do very fine trading in either direction in this market. This is a very choppy market, very volatile market, and you can make money in both directions. In the Dow Jones, we were down 0.79% on Friday. The Dow Jones is now getting the breakout retest, which we should have seen strong bulls holding right around 389, and we did break down below 389, which means the bulls now need to hold 385. If the bulls cannot hold support at 385, this will look like a double top rejection breakdown that could take us back down towards 377, and all the way down at 377 would be a retest of that breakout from the previous highs that we had in January. So the bulls really need to get back over 391 and hold support at 385. Otherwise, the bears can come out and play in the Dow and try to push us down towards 377. On the Russell 2000 IWM ETF, we were up 0.19% on Friday. So even though we had the SPY and the triple Qs going lower, we are seeing the small caps holding support at this gap fill right around 201. Now, as you can tell from the arrow, I thought we would fill that gap and then start running higher towards 214. So if you want to try to catch that long trade, you need to stay bullish above the rising 50 EMA at 199. And then if we break down below 199, we're likely going lower, and then you can get more risk off, because below 199, we could come all the way back down towards 190. On the ARKK ETF, we were down 0.16% on Friday, and the ARKK ETF is at a very critical support right here between 47 and 48, because if the bulls cannot hold that support, this will look like a double or triple top rejection, and that should take us back down towards 44. So the bulls need to show up between 47 and 48, and if they do, they need to break the high up here above 51. On the VIX, we were only up 0.21% on Friday, so for quad witching, we did not get a lot of spike in the VIX, which is typical for a quad witching. So this does tell us there's still a low fear market, and this is still a bull market where the bulls are likely going to show up near support levels. It's only if we get a spike in the VIX above 15 and a run towards 18 and 20 that we're going to get high volume panic selling. And until we see that, I would plan on this being a bull trend trending higher. On Nvidia stock, we were down 0.12% on Friday, and Nvidia was trying to get a bull breakout back above the daily 5 EMA, but obviously was rejected near the end of the day. And this is playing out similar to what I said, that we would likely just form a bull flag and consolidate before going any higher. And this is a very bullish name and a very bullish stock with a very bullish trend, so there is no reason to believe that it's not going to 1,000. Now, if it's not going to 1,000, we need to break the bull trend. And even if we come down towards this gap fill at 823, that is likely going to be caught by buyers. And that means that support should hold up. So if you want to get bearish, you really need to wait until we can break down below 820. Otherwise, this could be a bull flag consolidation before we start higher towards 994 to 1,032. On Tesla stock, we were up 0.66% on Friday, and this is one of those stocks that is very oversold at very strong support, and I do believe it could run from 160 back up towards 187. If we break 160, I would still be a buyer around 158, and below 158, we could go down towards 146. So yes, this is a bear trend. So if you're not comfortable going long in a stock in a powerful bear trend, then obviously sit on the sidelines until we reverse it. But if you are comfortable catching a falling knife, this is a very low risk zone to do so. Between 158 and 160, I would be a buyer, and I would continue to hold it to see if we could go up here towards 187. On Apple stock, we were down 0.22% on Friday, and Apple had a very bullish close. Near the end of the day, we had a very high volume push, and we closed at the high of the day with a very bullish looking candle off of that support at 171. So in Apple, I do believe this is going to continue into next week, and that's going to mean we push higher to fill that gap at 177. Once we fill that gap, we have to see if that's going to be a lower high within a bear trend before the next lower low, or if the bulls will continue to push higher and break that resistance between 180 and 190. So there will be a ton of resistance, and it is a bear trend, so expect the bears to try to show up at lower highs, and the next lower high will likely be 177. So jumping back over to the S&P 500, this should remain a volatile month, and I do think it's going to remain a stock picker's market. So if you're a bear or bull, you should be able to do just fine as long as you're focusing on the right stocks or the right sectors. That means you could be making money long some stocks and making money going short other stocks, and that likely means the indices will stay within this range and continue to chop around. So it's hard to be extremely bullish, and it's very hard to be extremely bearish. I think you need to be selective, and you need to choose where you're bullish and choose where you're bearish. And then obviously that's what we're going to focus on in the Discord server. There's plenty of stocks to trade. That is one great part about being a trader, is nothing says you have to trade any specific thing. If there is a strong bull trend somewhere else, we're going to go there and trade it. And if there's a strong bear trend and you're a bear, you need to focus there. But overall, I do think the bulls are going to stay in control of this market, which means even if we get a correction, it is likely going to be a higher low within a bull trend before we continue even higher. That's where I think the bears are getting it wrong. In the longer term, I think the bears are looking for a crash and looking for doom and gloom. And I do think that is where they're going to be disappointed, and they're going to constantly be seeing that this is a bull market heading higher, which means even if we got a major stock market correction, that would still likely be a buying opportunity before we go higher. But that's still longer term speculation. We need to trade what we see on the chart, and if the chart starts looking bearish, we will become bearish, but right now we just don't see that. It's likely a market trading within a range, which means whether you're bear or bull just means you need to focus in the right areas. So if you want to come trade with us, come join us over at the Stocks Channel Discord server, where you'll get access to all of my intraday updates and technical analysis. You can find out how to join the Stocks Channel Discord by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.